Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for January 20th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We've had quite a move since election day, and prices have rallied significantly, and now we're sitting at highs. We've held here for the greater part of a month, 4 to 6 weeks, and basically inauguration day is here. We'll see how that plays out with the market in the coming days as volatility perhaps begins to return to the markets. Right now, there's really, again, nothing to be done at the moment. It's more about being cautious, watching for the signs. Again, anytime you have a super narrow range like this that's just tightly compressed, the market tends to test both edges of the range before confirmed breakout is seen or directional conviction is seen. So, for example, if this thing's going to break down, it's probably going to test higher levels first, reject, and then break down. If it's going to go up, then perhaps it may test down first and then rally. So keep that in mind. Let's not get fooled on the false breakout. Let's just stay back. Let's watch how this thing plays out from a swing perspective. But we are at key levels up here, and there's going to be some movement to come. We talked about the fact that there may be more development of the profile needed into 2214, so I'm still of the camp that we may test down into that zone, and it could still be a buying opportunity should it be tested. But again, we'll have to take it one day at a time and see how this thing continues to develop. Let's take a look at the intraday time frame. On an intraday basis, we've had a pretty decent range to watch. We've had edges to watch. The previous session, we had some testing into 2260 that allowed for a push back to value. We got a move into our 68 to 70 zone, which allowed for a move back across the range. So we had some ideas here yesterday. 57s continues to be very important, and that doesn't mean that it has to hold a support. You can see it was very important here. Price dropped through it, made it resistance, and dropped, popped back up, and then started to form higher support. A minor absorption signature, rallied, held it, and continued onward. So again, we're still trading in this range, and the edges are still the edges. So anything into 69, 70 could still be an opportunity to fade it back, and anything down into 50, 57, 58 could still be an opportunity to bring it back up again. So right now, it's about patiently waiting for edges to be tested, and if they're not tested and price continues to chop around value, you got to stay away and avoid the chop. So right now, looking for any signs that 69.70 could be tested for a return back toward value at 64, perhaps 61 and lower. Should price drop back into 57, 57.5, it could be an opportunity to bring it back up. All right, let's take a look here at crude oil. Here's a look at crude, the higher time frame of crude. There it is. Now again, this one continues to build out in the range. It's been a range that has developed over the last 6 weeks as well. We have kind of a rounded top here, a little bit of a clear support. Anytime you're building out a range like this, there could be significant movement at some point in time, but until then, it could be more chop back and forth. So just be careful up here at these highs. At the moment, prices are testing above the previous session's high, above the sell-off day midpoint. And so this is going to be early tell right now. If prices cannot hold above the previous session's high, we'll likely be testing the opposite end of the range back into 51.67 to 52. Otherwise, this range right here could lead right back to the top. So again, that's the problem right now, is that in a chunky range, you can just jiggle back and forth, and that's not very helpful when you're talking about swing directional moves. So at this time, it's a wait and see game. So just stand aside and let's see how this thing continues to develop from a swing perspective. But it's very clear prices are coiling up, and we're due for some sort of expansion at some point, but we'll be watching for those cues as to which way we go. Now, on an intraday basis, we'll take a look here. On an intraday basis, prices are trending up. Here's the move beyond the previous session's high, so that's 52.67, and you can see the first push up had a higher low here, and then we tested higher, and then there's a minor higher high that has been rejected. So right there, that's indicative that there's a little bit of rejection off the R3, and that could easily lead right back to value and perhaps back across the range toward about 52.20s. So right now, again, we're going to continue to watch this thing with value trending up. A test back at value could be a buying opportunity, but failure to hold it opens up a return back toward recent lows. Let's take a look at gold futures here. Here's a look at gold. Gold was fantastic yesterday on an intraday basis for us in the trading room. We'll look at it from a higher time frame right now. Basically, what I mentioned yesterday was watch this low right here. That's the key low right there where price was, any rejection below it would likely be seen as another push to new highs. We were expecting a continuation toward at least 1240 overall. But continuing in that direction means that bulls need to continue to hold and defend prices at and just below 1200. And the previous session we found a nice support zone, and we were able to bring it back toward our primary target or final target of the day, which was about 1205s. It even got higher than that. So right now you can see that prices are testing right into the tail of yesterday's minor rejection day. Bulls are trying to defend, but there was also a rejection here. So again, we can see what's happening here. We can see that this thing continues to trend higher. We can see every time there's a failure to hold below the previous low, we see expansion. Again, this is a zone right here that bulls really want to keep defended for another squeeze higher. Otherwise, failure to hold those levels will rotate this thing back down. The next key level below is going to be 1180. Now, if we look at the intraday time frame, here's what was really interesting about the previous session. We were looking for signs of rejection. And the one thing that we looked for was how was price going to respond outside of the previous week's close. It got below it, it started to reject, back above it, and that's when we mentioned in the trading room that any push between 1196 half and 1170 right here should be defended for a shot back to value, and then a continuation into 1205. And by the end of the day, we got those 1205s, and again, there was little to no adverse excursion, and our traders were able to take that trade. So this was a very nice continuation. And now you can see we're right back to the scene of the crime, basically. The 1197s, 98s, price dropped right into that zone. And again, prices below 1200 currently being defended. So on this next rotation, on a short-term basis here, if bulls can defend 1200, look for a squeeze back to 1204 and perhaps as high as 1206 half. Let's take a look here at the NQ to finish up. From a higher time frame perspective, you'll notice that the NQ is holding at highs, and not only holding at highs, but it continues to push to new highs quietly. Yesterday we had a new high, 50.74.75, but pushed back below the R25 pivots. That's the monthly 25% expansion beyond the previous month's high. So when we pushed through it, this was our area to defend, remember, and that was the 49.94 half level. And from there, price squeezed right into the R25. That's the weekly PivotBoss pivot, R25. So we got that level and we're right there right now. But a little bit of a rejection here. Again, overall, when you have a range that's this narrow, there's really not a whole lot to do. Any reverse or return back toward that 49.94 could still be an opportunity to defend, but we're not there. So again, we have to proceed with caution and continue to watch how this plays out. We have some key levels to watch, but we got to see how the market begins to respond as the volatility and volume begins to pick up heading into next week. On an intraday basis, here it is. On an intraday basis right now, you can see that prices returned off the lows yesterday afternoon. We got as low as about 50.36s. Price popped back up, higher lows, and eventually we rallied back to where we currently sit. Again, right now we're sitting up here near highs, and you can see as we got into those highs, it tried to seek a price discovery phase above the third standard deviation of VWAP, and then once it let go, it came across the range into the lower third standard. So right now, these are the edges. We haven't really seen much here in terms of overnight activity. Should price test into these edges and this high, that could be an opportunity to fade it back to value, at least short term. Likewise, if we drop down to this edge, it could be an opportunity to fade it back up. That's the range right now. And until we do that, it could be a sit on your hands type of day to see how it continues to develop. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck, trade well, and happy Friday.